All right, guys, we'll get started. And just to level set with you guys, this should be a fairly quick lecture. I've done this one multiple times before, but as I've been trading more and more with you guys, and as I've been finding more time to hop into Flips's VCs, this concept of ETFs has been coming up lately, and just the concept of having maybe sympathy trades when we just had ER season, and I think a perfect example is Nvidia. A lot of people wanted to trade Nvidia. Not only is Nvidia a very expensive, stock overall, but the contracts are very juiced up through IV. And people are like, well, how can we trade Nvidia without, directly buying a contract with Nvidia or buying something really far out of the money? And I think ETFs is a great segue into that. But also just the concept of sympathy plays, which I'll get to once we talk about QQQ and SPY, because I think those directly affect NVIDIA and how that specifically trades. But I think it affects a lot of the popular tech stocks that a lot of you guys like to trade. Give me 1 second. Sorry about that. And there's four major ones that we're going to be talking about. We're going to talk about the Russell, which Toasty, I believe, was actually calling out today. The actual ticker of it, which you guys see right here, is IWM. This is encapsulating all the small stocks. We will be going over the Dow Jones, sometimes known as the Dow 30. We'll be going over NASDAQ, which is essentially just QQQ. And then lastly, we'll be covering SPY, which the S&P 500, which everyone's really familiar about. But again, we're going to dive into the ETF. So, we're not really going to go into how to trade ETFs per se like that. I'm going to show you guys what is actually inside of these ETFs, so you guys can get a better understanding of how to trade them, when to use them, when to buy them, when not to buy them, right? And I think, like I said, we're just taking a different perspective into what people normally do. So let's get started with the Russell 2000. I think this is a very underrated ETF. A lot of people don't really pay a lot of attention to this. Like I said, I know Toasty has recently been trading this. Back in the day, I know FaZe used to trade it a lot, and I think Shark has been trading it recently as well. But what you'll see is IWM is essentially encapsulates all of the small cap stocks. So the Russell 2000 ETFs, it's the 2000 US small cap firms, essentially, right? So that's where it gets the nickname from, the Russell 2000. Literally has 2000 companies inside of it. When you actually go inside of the fund itself, though, and you look at the different sectors that make up the Russell 2000, you realize it's a mixture of multiple things stemming from technology, industrials, financial services, healthcare, consumer cyclical, energy, real estate, basic materials, consumer defensive utilities, and communication services. Yeah, Cal loved IWM. And I think it's a fairly, and Toasty, correct me if I'm wrong, because I don't really trade IWM too much. But like charting wise, it's pretty straightforward, right? Like it's pretty easy to follow. I don't want everyone on here going on and like trying to trade IWM. But even if actually, maybe we can just pull it up, because I know Toasty just recently posted some charts of it. Yeah, let's pull those up, because I think that would be pretty valuable for you guys. Let's do that. Just because I think so. This is what Toasty was actually saying. This is what the IWM he's actually looking at personally, right? He is drawing his trend lines. He's drawing his support. He's drawing his resistance. He's drawing his gaps. He has his 200 EMA. What else do you have? You have your weekly price level. You have a bull gap. Are you looking for a break up or down, Toasty? Let's see. IWM looking real nice today, undercutting this trend, holding the daily 9 EMA, now trading right above this key point, looking for higher and starting to accumulate some long positions, grabbing 1215, 180C of the January 15, 2024s. Okay. You want to continue this up. Okay. That makes a lot more sense. I would want it to close above that, and then that getting in would look really nice personally. And then you have a short, quick stop right underneath. Yep. Okay. Anyways, let's get back to what we were talking about, guys. IWM is a little bit different. To be honest, what's inside of it doesn't really matter. It's not as important as like what QQQ and SPY that we're going to talk about later. But I still wanted to show you guys because I think it's kind of cool when you guys actually like break open what's inside of these ETFs, right? Like, hey, like, and even if you actually go into the top 10% holders, it's not that robust. Again, you have 2,000 of these, uh, stocks that are inside of the Russell 2000. So again, you have a little bit of mixture of it. Don't pay too much attention to this. I would actually pay attention to the chart itself, but I always like to start with this because it is a very popular thing to trade here in our Discord. Um, Dow Jones, Dow 30. The ticker is not Dow. If you actually look up Dow, you're going to get a completely different stock. This is under DIA, and for futures, it's YM. Now, the Dow Jones itself, it tracks the top 30 companies, right? They're constantly being cycled in and cycled out. They're the only way that you're actually allowed to be part of the Dow 30, though, is that it's actually chosen by a committee of editors from the Wall Street journals, right? So that's how the Dow 30 actually came to be itself. And it's always been a predominant economic source of activity here in the US. You guys will always hear, hey, the Dow's up, the Dow's down. This is what they're talking about. Let's get into it. So what's inside of the Dow? So it's mainly made up of financial services, healthcare, a little bit of tech, industrials, consumer cyclical, consumer defensive. Then you range down to energy and communication services. But if you actually go down inside of the top 10% holdings, look what's inside of it, right? You have United Health, which is healthcare. You have Microsoft. 7% of the Dow Jones is Microsoft. You have Goldman Sachs. So you have financials, Home Depot, retail, McDonald's, Amgen, Visa, Caterpillar, Salesforce, and Boeing. Why are these companies in here? Why does it matter? If you realize none of these companies are small companies. Some of these companies have been around for hundreds and hundreds of years. These are companies that are continuing to just show value, is what I would call them. These are very value-based stocks. I think the only wild one here is Microsoft. As it continues to grow, it continues to innovate. But a lot of these other ones, you're not going to see a lot of innovation. How come Home Depot's there? Because it's a value stock, Caleb. So Home Depot isn't going to go anywhere anytime soon. The biggest risk that Home Depot has is probably, obviously, and I think for even Home Depot, you're not going to online shop 20 2x4s. You know what I mean? Like you're not, and you might do that. Maybe the new generation of builders are doing that. But at least when I ever go to Home Depot, like I actually like to pick up the stuff that I'm gonna build, right? I think that aspect of retail, especially with constructions, is gonna change. But a lot of these companies, when it comes to the value, right? Home Depot's not doing research and development. Visa's not doing research and development. McDonald's isn't doing research and development. You made it make sense. Amazon can compete. Yeah, right? Boeing, like these Caterpillar, these are huge companies, guys. Like go look at how much these companies are actually worth, not only on paper, but all the money that they've produced over time. The Dow Jones is almost, and this is why it's so important. If these companies are doing bad, then there's something bad usually happening in the economy, right? So that's where you kind of have to take this in. The Dow Jones just really shows the strength of the economy at times. That's why, again, why it's so fundamental when you're listening to podcasts, when you're listening to Wall Street Journal, they will be talking about the Dow Jones, right? So that's why you're seeing these powerful companies inside of it. These next two, though, I think is where we're going to spend a lot of the time right now. And that's NASDAQ or the NASDAQ 100 or the QQQ, which I think a lot of you guys are very familiar with. Again, and Invesco QQQ, which is funny because I've been starting to see commercials for Invesco QQQ. I didn't even know that, like, I don't know why they're doing commercials for it, but nevertheless. But in order to be part of it, they have to be listed on the NASDAQ 100 exchange for at least 2 years. There's a couple exceptions to this rule, and you'll see a couple of them. But what's inside the fund? Now, QQQ is known for tech, right? I think every single time when someone is trading QQQ, you are going to see technology being on the forefront. And it makes perfect sense because it's literally made 50% of the fund itself is based in technology, the rest in communication services, consumer cyclical, healthcare, consumer defensive, industrials. But why does this matter, right? Like Why should we care, Mario? Why is it important to really understand? This is why. And I think this, and I see it all the time. I see it when Toasty's calling out plays. I see it when Zaves or Tilio or Flips, they're calling out plays, and sometimes you guys just don't understand what they're looking at, why they're looking at it, and what are other ways to trade the stuff that they're trading. 11% of QQQ is Apple, right? Microsoft is 10%. Amazon is 5%. NVIDIA is 4%. I think this is a perfect example to pivot. I mean, NVIDIA just had earnings. A lot of people couldn't afford to have a NVIDIA contract. A lot of people didn't want to risk swinging NVIDIA contracts, especially with how crazy the IV was. So what do, right? You invest in a QQQ call. You invest in a QQQ put. You do this so you have exposure not only to NVIDIA, but a bunch of tech companies as well, without having direct correlation to what happens to said stocks. And I think that's the big difference. And I think that's what people don't understand is that QQQ, I think people said, like, if QQQ is going down, then Apple's going down. No, that's not how it works. QQQ isn't bringing down the rest of the stocks. The stocks that are inside of QQQ are bringing QQQ down. Does that make sense? I want to make sure that you guys understand that, because I feel like there's still this misunderstanding of what causes an ETF to go up or down. Cool, perfect. So this is what happens, and I think today was a perfect example. I believe Amazon Flips got into some AMD calls, and I think we were looking at Apple. We were looking at a couple different things, and this is where QQQ would actually make a difference. Sometimes you look at QQQ though, in the sense if you actually look at the chart where it's at, right? This is why when you hear Flips or when you hear Toasty, hey, we're looking to get into Apple, we're looking to get into NVIDIA, Amazon, whatever it is, they're also going to check on the ETFs to see how the sector as a whole is doing. Because maybe, for example, maybe you want to get an Apple, maybe Apple's doing a great job and it shows like, hey, we're going to pop on this bull flag. But then you notice QQQ is pulling back. The whole sector, technology as a whole, isn't really performing on the level that we want it to. Is it safe still to get into Apple? I mean, if your charts say so, if volumes say so, and if everything else checks off your list and it's like, hey, I do want to get an Apple, then go ahead, right? But you do have these levels on these ETFs that are used to like double check if you want to get into said position, because of the way it broadly covers technology as a whole. This is how it all starts piecing together. Let's say you can't afford Apple contracts, Microsoft contracts, any of these big contracts. You can still directly correlate. If Apple does good, I promise you, if you had QQQ calls, those get pumped up as well, and vice versa. Because they have such heavy weight on this, they can also pull it back down. And that's the cons of ETFs overall. My apologies, guys. My dog is being very annoying. She keeps trying to get in and out of my room. I have to keep getting up and getting. Anyways, this is QQQ, and I hope this is making sense for you guys. And we're going to get over to SPY, because I think it's just as important as QQQ. S&P 500 and ticker and SPY. And Toasty, am I missing anything? Anything you think that I should talk about to these guys regarding these two? I feel like so far it's been pretty self-explanatory. My dog, well, she left and then she came back. But if not, we'll keep going, guys. Awesome. S&P 500, the ticker is SPY, futures ES. And these ones I actually took recently, because as I was looking at them, I felt like something was incorrect about it. But SPY to me is an overall coverage of how the market is actually doing. If you guys notice, SPY isn't as heavy in tech, right? You have 50% tech in QQQ, and that's why it's known as the tech ETF. Whether SPY has a 30%, so it's pulled back a little bit more, and it's spread across different industries overall. But it's still very important, because it's still 30% of technology. Again, when I'm trading with Flips, when I'm trading with Toasty, we're still looking at SPY. We're still looking to see how it's reacting compared to the rest of the market. Now, this is where there's caveats, and this is why we like to break down what's inside of the actual ETFs. And this is why I'm going to show you guys why. Now, Apple makes up 7% of SPY. Microsoft makes up 7% of SPY. Amazon makes up 3% of SPY. And NVIDIA makes up 3% of SPY. But if you compare that to QQQ, while there is a big difference, I think this gets into misconception number 2. When people are like, SPY is holding, or people will say SPY is holding up the market, or Apple's holding up SPY, right? One of those has more weight than the other. Reality is, because Apple, Microsoft are such heavy factors of these ETFs, these can at times hold that ETF from fully collapsing down. And I've seen this time and time again. And Toasty, you can literally attest to this. I'm pleased to, I know I'm not full of shit here. There are days where the whole market is down, but Apple will be the only like green stock. And it's literally I've seen it. It's literally stopped. And I know some people claim that Apple's not strong enough to hold up the whole market, but I have seen Apple be green and stop the market from crashing, or at least having a heavy pullback down. And again, you guys just have to pay attention of what's inside of these ETFs because of how much weight. I think weight is like the perfect example, how much they weigh over across the ETF as a whole. And again, you're gonna see this across all the traders, across all the analysts that we have here at OOT. They will put emphasis in how's Apple doing, how's Microsoft doing, how are these tech companies doing, but then they'll go and double check on the QQQs, on the SPYs, how are things doing in correlation, right? To double check that they're actually getting the right information before they enter a trade. That's what you guys need to be doing. You guys need to just go double check if I'm going to enter a SPY put or a SPY call. How is Apple doing? Or vice versa. I want to enter an Apple call. How is QQQ doing? How is SPY doing? Do I want to enter an Apple call, or do I maybe want to get a broader spectrum across tech? Maybe I just want a QQQ call. Maybe I want to short tech and we get a QQQ put, right? Maybe I want to short Microsoft, but I don't want to buy directly into Microsoft. Then these are the examples that you guys have to start paying attention to, right? The different levels that the ETFs have, and then the different levels that the individual stocks have on their own. I hope that's making sense. I just want to chat. Does that make sense before we continue? Is there any questions regarding the different ETFs? Because these are some of like the biggest ones that I personally like to talk about. Makes sense. Perfect. Yes. Yes. Any questions? Anything else? I'll get into this as well. So essentially, you guys will be seeing this in futures. And if you notice, while these are futures, they're directly correlated to the Dow Jones, S&P 500, NASDAQ, the Russell, and the VIX. You'll be able to see these, and they do correlate directly. You'll see a lot of people use the command bots to pull these up. I just like to put this in there just to show you that they're directly correlated to the market itself. Like I said, today's lecture, very, very short, very, very fast, very, very sweet, but very, very important because of how important these ETFs are across the market overall. I'd love to take any questions. If not, we can continue the rest of this lecture. We can actually chart out these ETFs. We can actually, or chart out anything else for you guys as well, just to get a different perspective. But overall, the gist of ETFs is there. That is what I like to pay attention to as I'm trading personally. You'll see that. And I think tomorrow this is going to make a lot more sense, especially if a lot of you are coming in and trading with flips. If you're trading with Toasty, you'll notice that these guys will slip in these words. They'll slip in these names. And a lot of times I feel, and I've seen these questions live, and that's the reason why I wanted to do this again. It's because people are asking questions regarding, hey, why are you doing this? Hey, why are you doing that? You'll notice that Flip says, hey, I don't want to get in until I see NASDAQ go here. I don't want to get in until I see SPY have a support level of X or Y, whatever the case may be. It's a reason why these levels are so important, right? And you can do that across the board into anything. If we even start looking at actual trades themselves, we go down to, let's check out SPY for today. So SPY ended up red for the day, but I know some people like to day trade SPY. You can trade SPY. I believe you guys did day trade SPY with Flips this morning, or it was later in the afternoon. You guys got a couple SPY calls, right? So take advantage. If you look at some of these levels too, so if we look at SPY and then we compare this to, let's say, Apple, look at, again, do you see that, right? Do you see similarities in these two charts? That's what I want you guys to start paying attention to. There is a lot of similarities in the charts of SPY and Apple if you start paying attention to them, right? It's not 100%. They're not 100% equal, and I think that's what I want you guys to understand. Not everything is correlated 100%, but you can get a really good idea of how things are going just based off of looking at the ETFs. I think this QQQ, if we go back to Apple, I think this will give you a better idea as well. Again, if you notice, both of them look eerily similar, right? So use those to your advantage when you guys are going in to trade these bigger trades. Any questions? If not, I'm happy to look over some tickets for you guys. I'm happy to go over any other questions you guys might have about ETFs. Yeah, I'm here for you guys. In the chat, anyone? You guys are making me look bad in front of Toasty. If not, I mean, we can cut out early. I like calls on win. How do you pick trade within an ETF? Laura, is that just like a broad question if you asking like how to trade an ETF? Or can you elaborate a little bit more between SPY, QQQ, and XPX, which has a higher risk? XPX significantly has a higher risk for its own reasons. I'm sure River and Toasty can probably do a whole lecture on XPX and probably why you should not be trading XPX. And then personally from there, SPY and QQQ both have their pros and cons. But I would personally just stick with SPY and QQQ. There's people who are senior enough to understand the different levels between XPX and QQQ and SPY and are able to translate those. But personally, I just would not be touching it because I've seen so many portfolios blown up because people think that they are capable of trading XPX and have no idea what they're doing. So just stay away from them personally. When using an index to get confirmation on a particular stock, would you say the time delay is given a direction, 5-minute, 10-minute? That's a very, very good question. I think whoever this is, I think that depends on the type of trading that you're doing, right? Are you day trading? Are you scalping? Are you looking for a long-term are you looking for a long-term position? I think we need more long-term. Then yeah, don't worry about the delay. I think when you're thinking about a long-term trade and you're trying to use an ETF as to give you an idea, right? That's when you start looking, not only are you looking at dailies, you know who's probably the best at this, and I know he's in here and he's not going to talk, is Toasty. I think Toasty and River are probably some of the, and Started with 1K does this as well, are some of the only people I know who actually not only will use the daily, but they like to go to the weekly and the monthly. So you'll actually see weekly pivot points on SPY on Toasty's charts. You'll see that on started 1K's charts, and I think you might see it on River's charts as well, where they start looking at weekly and monthly positions. So Kyle, if you're looking to start a longer term, look for the trend that you're going to start seeing in the ETF, right? Because depending on what you're actually trying to get into, you're especially for a longer term trade, we're looking for the trend or the direction that that stock is going to try to go into, right? So if you notice that on a weekly level, or even if you want to go to it, and I've seen other people do it, go on the monthly. How is it doing on a monthly basis, right? Where has it been particular? Where are there strong support and resistance levels, not only on the weekly and the daily, but go for the monthly, right? Use that. Are we sitting on the monthly support level? Are we sitting somewhere strong that I know that SPY or the direction of SPY or the direction of QQQ is going to go into, right? That's what you're going to really start paying attention to when it comes to ETFs or just indexes in general, and how they're going to be able to guide you to take a better decision on your entries, especially with the long-term entries. But again, if you're going to do this on a shorter term, you can do the same thing, right? You can get an idea of how things are going. I personally would like to, if you're scalping or if you're day trading, and this is just coming from my experience and the experience that I've gathered from Flips, from River, from Tilio, is they really like to look at 15-minute candles, right? A 15-minute close. And they will also look at the 4-hour. Those are the big ones that they personally like to use. And especially when I've actually traded with them, is they will start using the 15 and the 4-hour to look for different levels to see how the whole sector is doing. Again, I think this is going to make a lot more sense tomorrow when you actually are trading with Flips, or if you're trading with Toasty or any of these other guys, you're going to be seeing them actually use this language, this verbiage as we go across the days. I hope that makes sense, Kyle. Let's say Laro says, say when we trade Chevron versus Exxon. Lara, are you saying like which one is better with that question? I don't really understand. And Kevin's asking for January 95 calls on Win. I mean, I can take a look at Win for you. I believe there's actually an index, and that's the thing. I probably should have said that. There's like an index or an ETF for everything. As crazy as it goes, like you can find stuff for oil, you can find stuff for corn, you can find stuff for about everything. And if I'm correct, there is one for obviously, I mean, you have jets for travel, right? This is another fun one that if you want to get exposure into travel, you can actually look at jets. That's another one that I personally like to. So like, let's say you personally don't want to have exposure in UAL, Love, or DAL, you can actually buy jets and you get that overarching experience across all of travel. I know there's one for like casinos and just gambling. I just don't remember what the ETF off the top of my head is. But if we look at Win, I used to have it here. Let me find it for you then. What is it? Sector Tracker is a good tools to see components of SPY and also sector ETFs. Let's take a look, James. And then it's gonna be like, you have a virus. Yeah, this is great. This is perfect, right? XLE. I know Toasty likes looking at that. That's for energy. XLF, financials. XLI, industrials. XLRE, real estate. These are great examples. Thank you. And then I'm assuming that you can just like find stuff in here as well. I think that's a great thing. This is awesome. And this is like pretty, are these just like the top ones that you're seeing, James? Click the drop downs on the names. Energy holdings. Okay. So you get a lot more breakdown into what they're actually doing. This is a great one. I'll make sure to share this. Bets. Yeah, Kevin, that's the name of it. It's Bets. So Bets is the ETF for gaming. This is the one for anything to do with like gambling. And I think this is the beautiful thing for ETFs, is that you can find like an ETF for everything, right? You can get exposure to different things. I know some people, again, maybe they don't have enough money to buy a particular stock, but I think ETFs are a great way for you guys to get exposure into multiple companies without having the direct down risk if that one stock goes down. It would have to take the whole sector to pull down in order for that stock to go down. Does that make ETFs like the safest thing to invest? No, but what I would like to say about ETF, it's probably the most consistent thing, right? Fun fact, if you actually open a life insurance policy, if you actually go to most brokers, what's the percentage? And this is going to be a fun fact for you guys. What percentage do you think these guys can promise you that if I am a mutual fund, if I am a life insurance policy, what percent return do you think these guys promise you? I'm really curious if you guys know this answer. You can type it in the chat. I'm curious if Toasty knows this answer, especially since he's listening. How much percentage do life insurance policies promise you? How much do these funds promise that they can actually 10%, 5%, probably half of SPY. So Toasty is actually the correct one. They only guarantee 5%. Why? And this is why I got pissed off when I opened it, but I understand why I have it opened. They only give you 4 to 6%. And the reason why is because all they do is trade SPY. These big institutions, for the consistent stake, because SPY on average gives you 7% a year, that's all they trade, right? So look at ETFs as consistency across. And Toasty, I'll send you pictures if you don't believe me. I'll text you later. It literally, if you go through my life insurance policy and you actually break down what these guys are investing in, all they invest is in SPY, right? So I know when some people ask me if there's one long-term portfolio that people could just consistently put their money in, I always tell people, if you want to put it really safe and you want to put into something that's consistent, that can guarantee returns year after year, just invest into ETFs. Have an automatic, and I think this is the key part about this all, right? I'll probably leave it with this. Have an automatic draw, $300, $200. I know that's not a lot. Have a separate account, a long-term account, where you're just pulling, and have it distribute into SPY and QQQ, into these other ETFs that you are comfortable with, and just let it sit there, because more than likely you are going to have, especially if you're DCAing into it, which is dollar cost averaging into it, you are going to get at least a 5 to 6% return every single year. Obviously things change, market changes, but over long term, I think especially for a lot of you younger folks, Tessie, I'm sure like you should do it. It just pull money. Like I'm doing it. I do it with my work. So I have my 401k, and the 401k just goes directly into SPY, and it pulls, I think it's 15%, right? Plus what I have on my life insurance that also goes into SPY. And then I have my other separate long-term stuff, but I really enjoy ETFs because you guys get these exposures into, again, different markets at cheap prices. I mean, we're looking at bets here that takes over gaming. Then you have Jets that takes over travel, right? So I again, my lectures are different. I'm not looking at charts per se in the way these other guys do. I think ultimately what I like with my lectures is to spark curiosity and make you guys think differently when it comes to trading, right? And make you guys go research and learn a couple things and start creating these long-term portfolios that maybe something you guys would have never done in your life, right? So if you guys go do that, and if you guys go study these different things, and this helps your trading, then I did my job. $145 every paycheck into my Roth, and I fill it with ETFs. I think that's a great idea, iPhone, whoever you are. I think that's a fantastic idea. right? Little by little, especially if it's within your means, right? Don't ever go out of your means, even if it's long term. Any tickers you're watching for long term holds. I was looking at travel. I was talking to Toasty about this like literally today or yesterday, how I was really looking at travel and I unfortunately didn't get in. So this was down at the 31 mark for DAL, and I was looking at UAL back down at the 34, 35 levels. There's still room for growth personally. We're not done with our holiday season. I still think there's more growth. So if there's like a decent pullback on these, which I think we're getting, I mean, we were literally at 41, we were at highs. If we come back to certain levels that I feel safe with, like these 37 levels, where you can average back down to 35 if it ever got that low, I'm considering it taking it, right? But again, like maybe I wasn't right. Maybe DAL or Love or even UAL wasn't the right move. And I didn't know which stock to get into. I could have just bought Jets and just held Jets, which I've done before in the past. Where if I just want a consistent ETF, then just do that. I know people who do that. People, instead of look and paying attention of Amazon, Nvidia, and all these shit, they literally all they do is just straight QQQ. They just get really, really good at one ETF. Is this what I recommend? You do what you need to do to trade your style, right? But some people literally just get really good at one thing and then just do that, right? So take that as how you want. But I think that's it about ETFs. So I'm trying to think if I'm leaving anything out. Toasty, anything you want to add? Anyone else? Anything in particular you guys want to talk about? If not, we can call it a little bit early here. That was fun. I feel like we had a good conversation in here, and I feel like you guys can learn something new. So if not, we'll end it a little early. I talk faster than most of these guys too. If not, I'll definitely did appreciate it. Yeah, Penn, thank you for stopping by. iPhone, thank you for stopping by. Help me, thank you. Space, thank you guys. This was a lot of fun, and I hope you, like I said, I hope you guys learned something. Larho, thank you. And I'll catch you guys later. Toasty, any last words before we head out? He's probably like cooking or something. He's probably not even listening. You're sick. Yeah, I knew it. I knew you were cooking. See, I knew it. I'll text you, man. I hope you get better. Thank you guys for stopping by. I'll catch you later. Someone said, can you list out these ETFs? Shills, what do you mean by can I list out the ETFs? Sorry. In the Discord. But there's so many, bro. Like here, I can literally share my screen again before I dip off. So like these are a bunch of them that you can do. I can post this this website, and James sent this over, so I don't want to take credit for what he gave me, right? But there's literally funds on everything. Like just there's tons and tons and tons of stuff. And you can literally, I think sometimes a lot of this is like going and investigating yourself. But I'll post like the big ones, like the obvious ones, like the QQQs and the spies and like that stuff. Shells, I'm more than happy to send that over. Um, I'll send. I just read what you said. Just want to write down your favorite ones. Yeah, especially like the ones that cover just random stuff that I like travel and bats and stuff like that. You know what I might do, and I used to do this. Let me do this. Let me reach out to the analysts, and I'll get a list of like all of their favorite ETFs, and then I'll send that out. I think that might be better. And I'll put their names and maybe like a why. Like why is this ETF like important to you, or why would you recommend trading it, right? I think that might be a little bit more beneficial than just mine, because I always like to get the opinions of others, because we all trade differently. And I think we need to remind ourselves, like we all trade differently. We all tackle the market differently. Some people are scalpers, some people are long traders like me, some people sell premium, some people do X, Y, and Z. Right. So I think that will be more beneficial for you, Shills. Um, do you recommend having, yes, Christian, yes. And I literally just gave a whole spiel about that. Please, please, like, I kid you not. Like, I remember the other day, my mom was like, can you trade for me? And literally, like, I was just so scared of losing my mom's money. I was like, just invest in SPY. Like, just invest in SPY. Obviously, you don't want all your money in SPY, and yeah, you can like diversify that across the market, but most of your money should be like um going to SPY. QQQ is the best moving ETF in my opinion for scalping. Space, maybe now you understand why. Why is QQQ so volatile? I don't know, maybe because 50% of the ETF is made of tech and tech is very volatile, right? Like now that makes more sense, maybe, right? Like now you get it. I feel like it does. QQQ is definitely more. I personally didn't trade it a lot. I've been trading it more recently. I personally was a SPY guy. I felt like SPY was very easy to just read, but news sometimes can get a little tricky. I think there is, Christian. I really think there is. I'm gonna have to ask Grizzlies. I swear to God there is one that like tracks BTC. Um, I don't know if it tracks the whole like crypto market, but I know there's one. And the only reason I know this is because during the time that crypto was coming out, there was like people were like, how the fuck do we short crypto? How do you short it? Because at the time it was like very difficult to trade. And I think there's like an inverse BTC where if BTC goes down, you make money. So if that exists, there has to be a positive one as well, right? So yeah, we'll have to look into that because I know there's some out there. There's different variables of that, right? So that's where it gets fun when you guys like start finding like these inverse. You got to be careful with the inverse ones though, like SQQ, because some of these are like 3 times leveraged, kind of like XPX, where it's like leveraged by I believe XPX is leveraged by 3. Be careful with those. Just stick with the regular ETS for now, and then I'll send over that list to you guys. But thank you guys for stopping by. This was a lot of fun. Cool. I'll call it a night here, guys. Catch you later.